All right, welcome Accounting 1 students to your very first accounting lesson. In today's lesson, we're going to talk about the different users of accounting information and then also do our first statement, which is going to be a net worth statement, and then talk about what its purpose is. So the thing we have to remember about accounting is that a lot of people have a misconceived idea about what accounting actually is. Sometimes people think that accounting is simply math, and sometimes people think that accounting is this really difficult business thing to wrap your head around. And really, when it comes down to it, accounting is simply all of the transactions that a business has. It's data, really, is what it is. Data that has to be recorded and then eventually reported in accounting reports. So that's all we're doing with accounting is we are recording and we're reporting. The actual information, though, gets used by a variety of people from the business owners, so the people who own the business. It might be used by managers. It could be used by investors or people who are looking to invest money in the business, maybe want to partner with a business. And then others as well, depending upon the type. And we don't talk about this until the second half of the year, but once we get to talk about corporations, corporations are actually required by law to report their financial status with the federal government. That's one of their regulations that they have as a corporation. But all of these people, what they do is they use the information that accountants gather and report to make business decisions and make sure that the business is staying healthy, so to speak, that they're working towards making decisions that are going to benefit the business in the short term as well as the long term. So technically, the definition of accounting that we use in this course is that it is the process of planning, recording, analyzing, and interpreting financial information. So some of the things that we plan with accountants is we talk about budgeting, making sure that we have a plan in place because just like anything in life, if you don't have a plan for your money, for your business, you can very easily overspend. A major part of accounting is recording. So we will eventually here very shortly in chapter 3 start talking about recording transactions in journals and how important that is. As we work through our chapters, we're going to talk about how do we analyze those transactions? What does that tell us about how we're spending our money? And then we also have to interpret it, meaning we're going to put it into financial statements. And then what do those numbers actually mean? So we made a net income of $50,000. Is that good? Well, that depends on what our sales were and what our expenses were. Okay. So we have to look at it in comparison to other numbers. We don't just say we have $50,000 and that's a good thing or it could be a bad thing. So an accounting system is the planned process that we go through, designed to compile our financial data and then eventually summarize the results in accounting records and reports. So every single business has an accounting system in place. If they didn't, they wouldn't be successful. And then finally, I've mentioned them a few times already, but the financial statements are essentially reports that summarize the condition and the operations of our business. So that's the I shouldn't say the long term, but that's the end goal is that we create these financial statements, but then we also understand what those financial statements mean in regards to the health of our business. So one of the very first financial statements that we're going to talk about is something called a net worth statement. And what a net worth statement shows is the person extending the loan to see the financial position of a borrower on a specific date to make a lending decision. So a lot of the times when we're going to start a business, we have to get money from somewhere. Unless you have a large savings account that you've saved up, unless you have family and friends that are helping to finance, you are going to have to get money from somewhere. And so what we look at on a net worth statement is, are you in a good position to be able to pay back your lender, which is typically going to be a bank? It could be an individual investor. But are you in a good financial position in order to pay back that loan at the ending date? So what a net worth statement has on it are assets. and liabilities. So an asset is anything of value that is owned, and that can be very widespread. The thing that we have to think about though when we're talking about an asset is that it has to have a realizable value. It has to have a tangible monetary value that can be attached to it. For example, you couldn't list your pet as an asset. There isn't a tangible value that you could put on a pet, just like you couldn't put a tangible value on a human life. Okay, so you cannot list those things as assets. And then a liability is an amount that is owed. Okay, so anything that you owe to people, we call that a liability. The difference between those two is called a personal net worth. So you can actually do this for yourself. Um, I'm guessing right now at this time in your life, you don't maybe own a lot of things and you probably don't owe a lot of people money. As you get older, you start to accumulate more things that are worth value. And then you also end up owing people money, whether that's for student loans, you owe money on a mortgage for a house, etc. So you get a personal net worth as you get older. In a business situation, what we call this is equity. And we'll be talking a lot more about equity in chapter 2. And as it says there, equity is the difference between assets and liabilities. So let's take a little look at a personal net worth statement here. Up at the very top, what we have is our heading for our financial statement. So you can see that it has the name of the individual. The second line has the name of the statement, which is net worth statement. And then please note that net worth statements are done only on a specific date, because the very next day you could withdraw $1,000 out of your savings account. So this is not over a period of time. This is on a specific date. So you can see what it has is it lists the assets here. Our assets, they have a savings account and a class ring for a total of $2,250. And then the liabilities, they owe $50 to their parents and $125 to Ace Electric. So their total liabilities is $75. So in order to find our net worth, we take the difference between those two numbers. Our total assets, which is what we own, minus our total liabilities, which is what we owe. And in a personal situation, we call that net worth. In a business situation, we call that equity. Excuse me. And the last thing that we just want to talk about, we don't get into it very much in accounting 1. We do a lot more in accounting 2. But talking about what ethics are, ethics are the principles of right and wrong that guide an individual in decision making. You have a lot of personal ethics. You have what you believe to be right and wrong in your mind. In regards to business decisions, we also have to use the use of ethics, because a lot of times as accountants, we have the ability to very easily change numbers, which would easily change information that gets put out there, either to business owners, to investors, to stockholders. That could sway people's decisions about whether or not to invest in our business, whether or not our business is profitable. And yes, that is fraudulent activity, and that's a whole separate piece that we don't necessarily get into. But you do need to be aware that you have a responsibility to do the right or wrong thing when you are reporting your financial position for your business. So that is the end of our short little lecture today. So you can head on over to your MindTap, and we are going to start working on our work together, and we're going to do our personal net worth statement.